So in this video, we'll go over how we can use price action rules to help us navigate trading the charts. But the first thing we need to do before we start trading, we need to analyze the pre-market structure. And structure was trading range because there is a clear key level of resistance, clear key level of support, and price broke out of this trading range below the main key level. The most breakouts of trading ranges will fail, at least temporarily. And this breakout, however, kept continuing, and there is no opportunity to try to buy the market. And by the time the market already is way too down like here, the new trend is starting to being established. You don't want to try to fade the breakout once the market is so far from the initial support. Market will not go all the way back into trading range while you're way too far down, all the way down here. This is the first sign this is going to be a legit trend that is starting. Now, what you can do, you can measure your trading range like this, and you can find your target where the price is most likely heading. So this is your first way. You're trying to find where this downtrend has its first target. Now, while this downtrend is still in effect, you're looking for two things. You're looking for second entry with the direction of a trend. So you're looking for second entry short for two-legged pullback, because two-legged pullback at the key entry point is a high probability setup. And you're looking for price to break the trend line, because after price breaks the trend line, new low will most likely be retested. Not every single time, there can be an attempt, but this is what you're expecting. So there is a new low that price formed all the way from down here, and there's the first attempt to sell, pull back higher, second attempt to sell, but this is not at the exponential moving average yet. It's not at the key entry point. And even though this worked for 8 ticks, this is not a high probability setup yet. Price consolidated for a few minutes, and this structure is just micro trading range. This structure is identical with this structure. It is just a different time frame, and as most breakouts of trading ranges will fail, so there's no surprise that this breakout of this tiny trading range failed, and where it found resistance at the exponential moving average at the key entry point. Big bearish bar. So this was first high probability setup for the day. Market pushed lower, created a lower high, confirmation of this failed breakout. However, lower high is way too big, and you don't have that much room to these lows. There's better entry. There is a failed second entry long, new extreme, first entry long, second entry long. Second entry short is a high probability setup because it's with the direction of a trend. Since the trend is down and you just broke the trend line, the second entry long, you want to bet against it. You want to bet that it's going to be a failure because you don't have a new extreme form yet. So any opportunity for traders to buy the market, you want to treat it as a failure. And look how you touch the EMA, turn down, and you created additional leg, the new extreme. When I was watching this live, I was a little bit afraid that we may be way too close to this target, and I was sitting on my hands patiently. After new low is formed, there are two options. Either we're gonna get correction or we're gonna straight up reverse. But sometimes even after correction, trend may resume, and you're going to find that out by being patient, because you have a new low and you have a first attempt to sell, pull back, second attempt to sell. You don't want to go short yet after breaking a new low. You want to be patient. You're in its correction phase. But you guys can see how EMA keeps rejecting price. Another attempt to sell. EMA is rejecting price. Another attempt to sell. So there are multiple pushes higher. EMA keeps rejecting price every single time. So that means that we are failing to push higher. Now this was exactly at the open. So I don't recommend taking any trades here because this was really quick. Quick move up, quick move down, quick move up, quick move down. So I only marked it as an example if you manage to take it. But this is a new low. First entry short, second entry short, a new high. First entry long, pullback, second entry long. Two high probability setups, second entry long failure. Two high probability setups, EMA kept rejecting price every single time, which confirms the bearish momentum and such a small bar, and price eventually broke lower. And look what a gorgeous runner you would have had. As the price keeps breaking lower, it is obvious that the trend is resuming, and you can find the spike in the channel because your first target is to measure this leg, and you put it somewhere around here, but this leg is way too steep. You're most likely not going to get two steep legs like this. The second leg, if the first leg is steep, is going to be a little bit slanted. It's going to take some time. And once you start seeing small little bars, there are dojis that have a lot of stems, and they're not really, quick direction working. This is how you know this is a strong trend. This is a 45-degree angle trends are the strongest trends. The big steep moves up, the big bars, steep moves, they look very strong, but it's very shortened. They will get reversed fairly quickly. So once you see price pushing below EMA like this, only thing you're focusing on is selling. You're not looking for any reason to go long at all. You're not picking the bottom. Only thing you want to do is look for second entries at the key entry points. And there's a bunch of congestion here. There's the new low, first entry short, second entry short, far away from key entry point. There's the uptrend working higher. There's a little break, new extreme form, which tells you that the uptrend is no longer in control and I'm safe to be looking for opportunities to sell. However, it's still quite congested. It is a little bit fell breaker higher, so this could be a decent aggressive entry. At this point on, you're still not sure it is such a strong downtrend, but this definitely easily could have been marked, but this is not a high probability setup per se. Then you have a lower high that is still directly into these lows, but once you push below these lows, then this is confirming that the downtrend is really strong and you have a new high. First attempt to buy the market, pull back, second attempt to buy the market, which you want to bet that is going to fail in such a strong bearish structure, and it failed indeed. It almost touched the EMA, quickly reversed, failed second entry long, big bearish bar, high probability setup. New low was formed, so you're resetting the count and you're still only thinking about selling unless you get until you get a break and a new extreme to be formed. First entry short, second entry short. You're not touching the EMA, so this is a little bit more aggressive setup, but this was my first trade for the day with the break and new high that indicating that uptrend is no longer valid. This is a big bearish bar in such a strong downtrend with a bunch of small bars. You're most likely not going to get pulled back to EMA. I decided to pull the trigger here and it worked. I mean, you're doing the same thing. You're resetting the count, first entry short, second entry short, but below bullish bar. You don't care about that. You're selling, so you want to sell below bearish bar. And by the time you can sell below the bearish bar, you get the entry right here, but you got 1, 2, 3, 4, 5 bars stacked. EMA is in the middle of those bars. Once again, could easily mark it. The first break of the upper trend line, so you're expecting at least retest. There was a micro retest right here. It instantly turned down. This could have been easily a marked trade. Too bad there's no lower high. So once again, you can make a case for going short here and here at the same time. This is such a strong downtrend at this point on that you may want to start pulling trigger on any second entry, but unfortunately you just get a bunch of first entries and first entries. So this is where you have to be really patient, because it's not easy to watch this market go without you, and you really have to show skill as a trader not to get tilted. And it was getting quite hard because it's not easy to get some of these trades. You're going to miss a few trades. Now when I was watching this, I had my channel a little bit tighter because I didn't like the overshoot, and this was the channel I had a channel like this, let's say, and actually looking a little bit sketchy. Hold on, this was the channel I had, yeah, and we had a new extreme form and we have only first entry short, but take a look, there's a break and a new extreme, and there is a two-legged pullback up. So after breaking a new extreme, you're expecting that you're going to push below EMA and you're expecting a lower high or failed second entry long, but you don't get that. Market just pushed way below EMA, and by the time you get lower high, you're all the way down close to these lows. And even though you have a break and a new extreme, there's one exception, and that's this strong trend. If you have a strong uptrend day or strong downtrend day, market can just keep making new extremes and new extremes constantly. And this was one of these examples that I was looking at, and this was why I took this trade right here. My second trade was a losing trade because there's a new low form. There's the first entry short, pullback, second entry short, a new high, first entry long, pullback, second entry long right here. This is such a tiny little bar. It was worth the risk. And at the time, you're looking at a trend line like this. So you have a break, little attempt. Both key entry points are holding. It was a quick, easy scalp. And once this trade failed, this is where you have to adjust the trend line to this, because this confirmed that this trend line is indeed valid. You guys can see you have a nice bullish uptrend working higher. Now, the trend line ended up being something like this. And this is what kept me from taking this trade right here, because I played my previous channel with the break and a new low. So I didn't want to keep selling here because this is confirming the key entry point. But you have the uptrend in play. There's the break. EMA keeps holding every single time. You cannot push below EMA once. The same thing right here. EMA is rejecting price. You cannot push above. Here you cannot close below. And price finally created a break, created a new extreme, which tells you that the uptrend is no longer valid. There's the first entry long, pullback, second entry long, failure. Why this is a good trade? This is the first break of this uptrend. If you look at it this way, which you have to look at it that way because you're once again pushing below EMA if you play the previous channel, and high probability setup is going to be a reversal pattern. Or you failed second entry, long that you're expecting a new low to be formed. So there is a new high, first entry long, pullback, second entry long, failure. You're not touching the EMA yet, so a little bit aggressive. You get additional entry to go short here, but you probably miss this entry because this happened so fast and market created a new extreme. Take a look what you have here. You have a first entry short, a second entry short, but you're once again far away from EMA, so you cannot take it, and you get a double trap entry right here because everybody who went short here got instantly trapped, and everybody who went long too early got trapped as well. So this short right here, even though it is technically a third entry short, that's a double trap entry. It trapped everybody going short on a second entry short and everybody going long too early on a failed second entry short. So even though you have a break and a new low, you don't want to keep reversing the market just yet. Such a strong downtrend is not going to get reversed quickly. I have a market because it is 6-point stop loss, but this is something to consider. It can be fairly tempting to take. After that, market finally starting to correct. You don't want to be buying at this point yet, because after strong downtrends, market will generally give you a consolidating structure before anything will happen. After a consolidating structure, then uptrend can start or the downtrend can resume, but most often than not, after strong trends, especially downtrends, you will get a range-like structure. So price is just right now chopping around this exponential moving average. After you have a break and a new low of this nice downtrend, you just want to sit patiently. You don't want to force any entries because the market has no clear direction yet. Market actually reversed higher quickly. There was a first entry long, second entry long, which at the time I didn't have the trend line and I was looking at the trading range like this, and you guys can see how a range-like structure it looks like. Because there is, we've been really working sideways for quite some time now, and I wasn't really thinking the market can push higher. I was thinking the market will, from here, push back to trading range. It took a little bit of time before we did, but this is what I was looking at the time. So once again, follow the trend line rules. There's a break, 2 legs up, so you're no longer looking to go long. You have a new extreme form, and you have a first entry long, pull back below EMA indicating bearish momentum, and you're looking for second entry long to go short here because uptrend played out. So you don't want to keep buying. You're below EMA indicating bearish momentum. You're below this trend line. There is no second entry long. This is a hidden entry and bunch of stems. So there is no failed second entry long. You cannot go short here. By the time you get failed second entry long, you're already way too down after this entire move happened. You cannot go short so far from EMA, way too down like this. This is a trap because you missed the entry right here. You cannot chase the market at this point on. From that point on, market consolidated. There was no clear direction. You have a first break of this downtrend, but you get a first entry short, little push higher, and little second entry short. But market, this is quite a doji bar. By the time you get the big bearish bar, you're way too close to these lows, and this is way too sideways. No clear entry right here. Really, you really want to be patient, and this is the area. Take a look how easy this downtrend was, and now you don't want to be forcing trades in this area right here. There is a little failed breakout because most breakouts of these trading ranges will fail. So the failed breakout higher, pull back, failed breakout to the downside. You don't want to keep buying because you traded down into the trading range, so you're most likely going to break down. And there is a new high, first entry long, second entry long failure while EMA is holding price. But you're going short into this support and price push back above the support into trading range. So you're going short a little bit too early, but once price pushed higher and trapped all the longs, and there was a second entry short that closed below EMA and confirmed the failed second entry long, because this second entry long, your stop goes one tick above here, and it was confirmed. This is where I took my third trade for the day. A little bit aggressive because it is starting to get a little bit congested. You're quite close to this support. But I like the fact that you trapped long, second entry short, failed second entry long is still working. Could be decent trade for the scalp. And here's the important thing, what's starting to happen. Still, market still no clear direction, but there is a bullish imbalance because the middle of the trading range is holding price. You're supposed to push all the way down to here, and it's not happening. There's a gap, midline is holding, and you have a strong push above the EMA. And this is what you have to understand about trading, that you have a downtrend here. Just because you have, indecision right here, an area where it's not easy to find the bias, you just sit on your hands and market will start trending again and give you more clear setup. So as the price is holding above the EMA and keeps pushing higher, You were looking right here for failed second entry shorts, and here you're doing the same thing, just the opposite. Excuse me, you were looking for second entry shorts at the key entry points, and you're looking for second entry longs at key entry point, and you get the new high, first entry long, pullback, second entry long, and a gorgeous second entry long, breaking a new low, downtrend played out, 2 legs down, key entry point is holding big bullish bar, textbook price action entry. You don't have to do anything the entire day, just wait for textbook price action entry. Higher low setup right here, EMA keeps holding price, and you get a new low, first entry short, second entry short failure. Take a look. During downtrend, you're looking for second entry shorts at key entry points, or you're looking for failed second entry longs for people trying to reverse the market. Same thing right here. Market is now up, EMA keeps holding price. Any second entry to sell is a trap, and you want to bet against it. Okay, high low right here, failed second entry short right here. You're counting for second entry longs. You get the first entry long, you're not interested, pull back, first entry long, pull back, second entry long. Finally, repeat pattern of this. 2 key entry points are holding, first 2 swings set up the trend line, third swing confirmed it. More key entry points you have, more confluence, the better. All right, but unfortunately you cannot go long above the bearish bar right here, and by the time you have a bullish bar, you're going long way too high up, and this is gigantic stop loss. This would have been a great entry, breaking a new low, 2 legs down, 2 key entry points. Unfortunately, the entry right here is not really too easy to pick, but you know, textbook reversal pattern of this, you're just I can't enter this. You have a new high, first entry long, which you don't want to take. And same thing right here, you don't want to go long on a second entry above the bearish bar. By the time you get the bullish bar, double bar entry, your stop loss has to go all the way down here. Gigantic stop loss. You cannot go long directly into the top of this channel, but no matter the failure, because once you get an overshoot a lot of times leads to a break of a trend line or straight up reversal. So you don't want to be taking second entry long so close to this. Even if you don't treat it as an overshoot, you're still quite close. Not recommending. For that reason, I saw it as overshoot, and you guys can see what can happen. You have a first entry long, second entry long, and it failed. And for that reason, if you played like overshoot, which I did at the time, you can easily stay out of this trade. And then you have a little bit of third entry long, still not the best entry. And when you get a new low, first entry short, second entry short failure, you want to reset the count after every 2-legged pullback at the key entry point. This could be a decent entry. Nice trap, failed second entry short. Little bit of room here, big bullish bar, EMA keeps holding price so many times, and last push up, market turned down lower, and this is the first break for the uptrend. And just like here, after you have a break, you're expecting new low to be formed. You have a break, that doesn't mean that you start selling. No, you're only looking for buying opportunities because you're expecting for price to create a new extreme. And you have a first break of the uptrend, and you have a move back above the EMA, above the trend line, which confirms the bullish momentum. And here you have a higher low setup. My last trade for the day, scalped quickly, was a little bit lucky because market instantly stopped my runner and turned back down, creating the second leg down. It took a little bit of time, but just because the correction takes time, such a strong uptrend will most likely get a new extreme. So don't panic, don't start selling yet. 2 legs down, new low was formed. You're still expecting for price to create a new extreme. First entry short, pullback. You're hoping to get a tick lower and second entry short failure. You don't get the tick lower, and for that reason you have to sit here and unfortunately miss this trade. By the time you get a legit failed second entry short, you get 1, 2, 3, 4, 5, 6 bars stacked, EMA exactly in the middle of those bars. Not the great entry, entering in a congestion like this. And then you have a push above EMA confirming the bullish momentum, and you're resuming the same thing you were doing. Easy price action, simple, no complications. First entry long, second entry long, big bullish bar above the EMA, new high, only a first entry long, new high, first entry long, second entry long, textbook reversal pattern, repeat pattern of this and this, especially this. But I'm marking this because this bullish bar is really big. This bullish bar is much smaller, but once again, you don't want to go long above the bearish bar. You get finally a bullish bar, 2 key entry points are holding, and the more key entry points you get, stronger the confluence, the better. And you're with the direction of a trend, high probably setup. And it's the last trade for today because the market is now getting close to be closed. A lot of price action on the table, and not that many high probability clean setup as you would like. And those you see still hard to enter because market volatility, so much noise and etc, etc. So that comes to the territory, but a lot of price action. And just to show you guys that you don't have to force entries when the market is consolidating, right? Just sit on your hands, be patient, and once the market resumes some trend, that's where you're going to start counting. And simple price action, simple second entries with the direction of a trend, that's all you need. So I'm going to see you guys in the next one. Take care, buddy.